This is the visual that is haunting the trading floors from Toronto to London this morning. It is the image that no central bank intervention, no diplomatic emergency call, and no emergency rate hike can fix. If you look at the live ticker for the Canadian dollar and the North American bond yields, you will see something that defies the laws of modern economic cooperation. It is a gray morning in the financial heart of the world, and for the first time in a generation, the adults in the room have no answers. At precisely 8 o'clock a.m., the 50% tariff bomb officially detonated. This isn't just a policy change. It's a systemic amputation. They are calling it the moment Mark Carney lost control of the narrative, and unlike previous trade disputes that played out over months in courtrooms, this is hitting with the instantaneous violence of a digital bank run. Before we peel back the layers of this collapse, I want to ask you, are you truly prepared for a reality where your cost of living is decided by a border ultimatum? How much of your financial security is tied to a global system that just broke? Stay with me, because what the Krugman analysis is revealing is that we aren't just looking at a trade war. We are looking at the death of the Western trade alliance as we know it. If you value intelligence that moves faster than the mainstream news, join this community by subscribing now. We are documenting the fall of the old order in real time. The speed of this structural failure is what has sent shockwaves through the G7. We are seeing a coordinated liquidation of assets that experts thought were untouchable. Trump's 50% tariff on everything crossing the 49th parallel is more than a tax. It is a weaponized reset of the global supply chain for the average person. The reality is hitting the energy sector first. Canada is the primary exporter of oil and electricity to the United States. By placing a 50% levy on these essentials, the administration has effectively placed a tax on every light bulb in the Northeast and every gas tank in the Midwest. Mark Carney, the man who spent his career stabilizing the Bank of England and the Bank of Canada, is facing a scenario that his models never predicted: a total breakdown of North American trust. This is the standoff. On one side, a president betting that Canada will fold under the weight of an economic siege. On the other, a global financial elite watching the liquidity of the world's largest trading partnership evaporate in hours. The Krugman briefing suggests we are entering a death spiral where the cost of manufacturing will force a domestic American inflation spike that no interest rate hike can contain. Mark Carney's nightmare began the second the executive order was signed. For decades, the Canadian economy was built on the assumption of seamless integration with the U.S. consumer. Every bridge, every pipeline, and every fiber optic cable was a tether to American prosperity. Today, those tethers have become nooses. Carney's attempts to stabilize the loonie have been met with a wall of sell orders. Investors are realizing that the special relationship was a fragile gentleman's agreement, and the new rules are dictated by raw power, not treaties. The automotive industry, the literal engine of Ontario and Michigan, has entered a state of total paralysis. Parts that cross the border multiple times during assembly are now subject to a compounding tax that makes the final product unbuyable. Logistics firms are reporting thousands of containers stuck in a legal limbo. This is the moment the system stopped working. It is a masterstroke if it forces a total Canadian surrender and a new era of U.S. hegemony. It is a fatal error if it shatters the very industrial base that makes America. First, a possibility. Let's examine the psychological collapse within the global investor class. For the last 30 years, the U.S.-Canada border was considered the safest geographic bet in history. Now that certainty has been replaced by absolute friction. We are witnessing capital flight on a scale usually reserved for war zones. Why? Because you cannot rebuild a continental trade network on a weekend. The invisible wall isn't made of concrete. It's made of risk premiums. Paul Krugman's latest analysis warns of a systemic seizure in the repo markets. When the value of Canadian collateral drops by 20% in a day due to currency devaluation, every bank holding that debt faces a margin call. This is how a border dispute becomes a global financial standoff. It starts at a customs booth in Windsor and ends with a liquidity crisis in a New York hedge fund. Everyone with a pension fund or a 401,000 is currently in the crossfire of this tariff bomb. The cultural and political shockwaves are just as devastating as the economic ones. For the first time, Canada is being treated not as a neighbor, but as a strategic adversary. Across the digital landscape, the hashtag Thegret decoupling is the only thing people are talking about. There is a sense of profound betrayal in the north and a sense of aggressive nationalism in the south, but as the price of lumber, paper, and minerals begins to skyrocket, the celebratory mood is shifting. This is the pivot. Can the American consumer handle a 30% increase in the cost of a new home? The Trump administration is betting that the pain will be a short, sharp shock that forces Ottawa to the table. But Carney and the Canadian government are looking toward Brussels and Beijing. If this wall forces Canada to pivot its resources to the east, the United States will have traded a loyal neighbor for a hostile competitor. On its own doorstep, the border was a buffer. Now it's a front line. Now consider what economists call the Krugman paradox. While the 50% tariff is designed to protect domestic industry, it actually acts as a poison pill for the very workers it claims to help. If a factory in Ohio needs Canadian aluminum to build a product, and that aluminum now costs 50% more, the factory has two choices: raise prices and lose customers, or close its doors. This is the feedback loop that Carney is trying to explain to a deaf audience in Washington. We are monitoring the liquidations in the commodity markets with extreme concern. From timber to hydropower, the lifeblood of American infrastructure is being choked off. If you were planning any major purchase or investment, you are now paying the standoff premium. This is the hidden cost of the masterstroke. It is a transfer of wealth from the average citizen to the state, disguised as a trade victory. The endgame of this financial standoff is being written right now in high-stakes emergency sessions. Reports are surfacing that Mark Carney is organizing a coalition of international central banks to provide a liquidity floor for the Canadian dollar, effectively bypassing the U.S. financial system. This is a move toward a multipolar financial world. It is the ultimate loss of control for the traditional Western order. We are seeing a fragmentation of interests that the world hasn't seen since the 1930s. States like New York and Washington, which rely heavily on Canadian trade, are already seeing their credit ratings pressured. This is a civil war of spreadsheets. On one side, the political narrative of absolute sovereignty. On the other, the mathematical reality of global interdependence. The tariff bomb has forced everyone to choose a side, and the middle ground has completely disappeared. As we look at the next 48 hours, the critical metric is the bond market. If the yield on North American debt continues to spike, it means the world no longer believes in the stability of our trade. This is the ultimate stress test for the American Republic and its closest ally. The moment of loss for Carney might actually be the moment of realization for the entire world that the era of predictable, cheap, and easy trade is dead. We are in uncharted territory. The maps are being rewritten as we speak. The customs gates are closed, the markets are in a state of shock, and the 50% tariff is the new reality. Stay safe, keep your assets liquid, and prepare for a year of volatility that will redefine your net worth. If this analysis gave you the clarity you needed, share it with those who are still waiting for the world to go back to normal. Thank you for being part of this channel. I will see you in the next emergency update.